Hello traders, welcome to your daily update for Tuesday the 7th of April 2015, and we have just had the RBA rate decision come out and they chose to leave rates on hold, and we had a boost in retail sales. So this has led to the Australian dollar being boosted up to 77 cents as the market was very short the Australian dollar and really anticipated an interest rate cut. So being caught out by surprise has definitely led to a real sharp move higher. Just quickly on that, the RBA did say that growth was below pace. The Australian dollar needed to be lower. Domestic growth was quite weak, and they do see the need for further depreciation in the Australian dollar. They also see that they are working with regulators to try and contain the housing risks. And finally, they see that it may be appropriate for further easing ahead, and they'll be assessing the case for this easing in forthcoming meetings. So the market may cap the Australian dollar somewhat, as others will expect, and the market could form an opinion that an interest rate cut is imminent now in future markets because the data has been quite weak. So definitely keep that in mind and don't get too excited, because we do have the US dollar strength come back in. Now, on non-farm payrolls on Friday, the market wasn't given a great opportunity to price in the such weak and poor data. Now, the unemployment rate remained flat, and we had an average hourly earnings increase. So there's an argument there that the people that are looking for jobs actually have found them, and therefore the jobs being put on each quarter could actually start to slow. But the average hourlings and the unemployment rate could remain where it is or slightly improve. So the metrics are shaping up and still don't point to such a bad figure. And the Fed doesn't focus on one particular data and definitely doesn't make decisions on 1 month of poor decision, which was a little bit out of the blue. But given the previous really strong figures, it's not surprising that we did get a weak figure. So the US dollar strength has come back in, and the market has been taken its lead from the bond market. I mentioned last week that the bond market hasn't really been pricing in the US dollar strength. Well, over Easter, they've all thought about it, and yesterday was somewhat a weak, low volatility day, and I'm quite surprised, but bonds were bought up quite heavily in the US dollar index as well as equities. Now, that suggests that they are also starting to weigh in and buy into the idea that US dollar strength and the interest rate hike is not too far off. So right now we do have a bounce in the US dollar, and we have seen other indices being affected. This week we do have the RBA was the biggest news for the day today. We do have a plethora of other data, but as you can see, it's all small tier stuff. We do have market surface PMI for Spain, and we'll see what that comes out with. Overall, we're going to have to look at all this data as a group and look at the tone of that, and if it is slightly weaker, well then overall we could start to see that continue to weigh on the euro a little bit more than otherwise it would, and depending on the US dollar story. So the US dollar index is back into play, and we really need to focus on that taking a cue for this week, because coming into Wednesday we do have the FOMC minutes right here, and the market is starting to think about that and starting to price in what its thoughts will come out of this particular meeting. So the market will start looking ahead towards that for its indication. So like I said, there isn't a lot of anything else that's major for us to be looking at tonight, but definitely take a cue from the US dollar index. If we have a look at the US dollar index, we've seen this low here. This is the pullback of the non-farm payroll, and then we had a gap here for the long weekend, and we've had a big bounce of buying of bonds and equities. So we just need to see whether we have found support here. We do have a lower high, which is forming a downtrend line. So we're moving into quite a tight consolidation pattern, and the FOMC minutes could actually create a breakout on either side of that. So I don't think we're going to see massive moves, but definitely keep an eye on this chart. If I look at the Australian dollar, let's look at the New Zealand dollar first. The New Zealand dollar, as you can see here, we've had the non-farm payrolls create a massive rally, and it touched above 76 cents here in the US dollar. And we can see now that with this, we've had a pullback on the bounce of the US dollar index. So it's going to be quite interesting on what happens here now on the daily, whether we get support for the New Zealand versus the US off the 75 cent range, especially now that we've had the interest rates left on hold with Australia. Usually the flow-on effect will help the New Zealand. Now the Australian dollar, you can see here that we've had a major bounce. So we did have a fall on the US dollar index being bought up yesterday, and then now we've had a massive bounce, and it's testing the 77-cent range. I do have a small order here on a tiny account that I'm building for a launch of my website, so just to get statistics for everybody. And I've started looking to fade the Australian dollar, predicting that it will drift below 77 cents. Nonetheless, I think that the move has really caught the market out, and we could see some higher prices in the short term. So I'm just purely scalping here, and it's just one of my trading methods that I will teach you. The European session, we've just got this resistance level that's flat top here, and we've struggled to break above it, and we do have a sell-off here of the euro yesterday with the US dollar strength, and it's going to be interesting to see if it follows through or not. Definitely keep an eye on that and some other time frames. 109 is acting as support, so we need a breakthrough of that to expect the market to push down into this area. The Great British Pound had to pull back a little bit more. We had the big bounce here on the non-farm payrolls, and then yesterday we've had the big sell-off of the pound versus the US. Maintaining this $1.50 just cannot be broken. Very, very strong resistance level, and the market is very cautious of this. So we're still within a consolidation range. As you can see, we had this triangle here then we had a lot of indecision. We had the non-farm payroll, and then now we've had the US dollar buying, and we're pretty much back down into this range-bound area. So be very careful, and I'll be looking to just scalp majority of these markets. The US dollar versus the CAD, once again, we have support here that is very strong at $1.24. It's going to be interesting to see what happens, but we also need to take note of the oil market. Okay, so oil's bounced quite heavily, and we'll see here. I'll just try and bring it up for you all. That's a 1 hour chart, so you can see what happened yesterday. It had another big rally. If I go to a daily chart, you can see there that we are coming up to break through some major resistance levels. In this chart here, if you have a look at the pattern, we're seeing a resistance level that is quite an inverted story compared to what I would say the CAD is here with its support level. So it'd be interesting to see whether we break through and continue, and it's going to be subject also to the US dollar story. So definitely keep an eye on those major levels. The US versus the Japanese yen, we did get a bounce here, and it's going to be interesting to see what the US dollar index does and whether we actually break through and start to make some higher highs, because we've got some lower highs right now, and we're really in a consolidation pattern once again. The market doesn't have a lot of direction, and it's really going to need the FMOC minutes to give it some further direction. All right, so that's a quick wrap up of what's going on today. Keep an eye on the US dollar index, and until tomorrow, trade well.